Chris with Life 180, and I am here with a lot of my friends. We are going to be talking about whole life insurance for dummies today. Now, if you've been watching the channel, you know that a couple weeks ago, I launched a video called Whole Life Insurance for Dummies, and I made a 10-minute-ish version of the video, and the goal was to kind of break down ultimately the process, the thinking process, the emotional process, the technical process, like kind of all the complicated elements that like people like to make whole life insurance more complicated than it needs to be. Break it down into its simplest parts and have you understand the process to follow, even if you're a dummy, to be able to get life insurance, right? And so, and to be able to think about like, when is whole life insurance good for you? When should you be looking at a term insurance policy potentially or something else? And so, you know, today I thought I would bring in a lot of my friends and we would talk about the perspective of what we hear every day and conversations we're having with clients and kind of why we all do what we do. Because at the end of the day, we obviously all believe in whole life insurance. We all have our own life stories. We all have our own experiences with clients. We all have our own beliefs and our own values. And if you watch my channel here at all, you know that I'm a big believer that people are struggling with money because their money is not in alignment with their values and beliefs. And the reason I believe whole life insurance is such a powerful asset in life is because when you really, really get intentional about starting with the end in mind and getting clear about what your values and beliefs are and what you're actually trying to accomplish in this life, and then you reverse engineer a plan to accomplish your desired objective, then whole life insurance starts to make a lot more sense. But if we, you know, I just got done doing yesterday. I had this hack job hit piece done on me, you know, from this guy called The Wealthy Accountant. It's a blog that was written. It's not a video. It's a guy that just did a blog. And Guy Hazeltine LLC, who has a YouTube channel. He's not on the Life 180 team or anything, but he saw the blog and he shared it with me. And he did a response video. And then he reached out to me. He's like, hey, I just did this response video to this horrible hit piece on you. Like, would you be interested in coming on and doing a video with me on this? Because like, I think it'd be awesome to get your feedback since you're the one who created the video and he's attacking you, like for you to give clarification. And I was like, let's do it. And so yesterday I went live with it, or not live, but we recorded. It was effectively live. We should have just did it live. But we did it, and it was absolutely awesome. And well, I thought it was going to be like a 40-minute video, ended up an hour and 54 minutes long. So we're going to break it down into a three-part video series that is going to be awesome. And he did it on one of my most tractioned videos, the Infinite Banking Simplified video, 5 mistakes people make when they're doing infinite banking. And it's you know, it is what it is. We'll see how it all plays out. But I think there's so much misinformation, misunderstanding about whole life insurance. And so you get a lot of people out there that are putting a lot of content out that just don't understand the ins and outs of how the products actually work and the different problems they solve and the different flexibilities and the different values and benefits that they offer in different scenarios for different people to solve different problems. And at the end of the day, that's really what we need to contemplate, right? Like not what is the title of the product, and you know, what are the technical things like the fact that a dividend is technically legally considered what do they call it? A payment of what do they call it? Like a overpayment,
return of premium.
A return of premium. That's the word. I was like, bleh. A return of premium for overpayment, right? Like that's what it's technically called, and you get a lot of tax benefits for that. And people like Dave Ramsey like to rip on it because they're like, oh, look at you stupid people for doing this. But it's like, if it were really a return of premium because you paid too much, technically speaking, you'd never be able to have more cash value in your policy than you have contributed. And that's not the case. And we show that every single day. And so what I thought would be fun is to share stories, because I love this. And what we'll do is we'll start sharing stories. And I want to get, you know, every one of you guys take on this about like why you sell whole life insurance, why you believe, and let's really focus today on keeping it simple, right? Like keeping not all the technicals, not all the details, the illustrations, and all the moving parts of the money, but let's stay high level about the different problems that it solves, the different people that it's a good use case for. And then honestly, tell me when, some scenarios when you think it's not the right fit, some scenarios when you think maybe you have different needs, maybe like a term policy or something of that nature. Give me an example, give me something, and we'll get started. So let's do this. Mr. Jeff Kamke, I want to hear from you.
Perfect. Yeah, I think, I'll start with what's that, Chris?
Yeah. No, go ahead.
Yeah,
You're
cool.
good.
Yeah, I think for me, I'll start with, my personal story getting into this, and I'll share a couple things about some clients. But for me, when I heard about whole life as a alternative to the other methods you could use to do things with your money, right? The traditional things, my skepticism, I guess you could say, was, how is this different than a normal whole life? Because I was looking at it from the infinite banking standpoint. And what drew me to it in the time of my life when I needed it after an accident my wife and I were involved in several years ago, I was looking for a way to not feel like I needed to clone myself a couple times over to pay off medical debt, to meet my living and lifestyle, and then also to plan for the future. Because I felt like I needed to do all three. And for me, whole life fit the bill of being more efficient with the dollars I'm making so that I can do some of each of those. I can accelerate debt pay down. I can put money away for the here and now. And I'm also planning for the future. And to me, that just made sense intuitively to me. Like, I can do more things with the dollars I've got. I'm interested in that. I want to know more. So we started a policy 6 years ago. And so, since that time, we've been in the industry. I think, the people that we've worked with, it's just about having control. It comes down to control. A lot of the people that we have worked with are chiropractors. They already see money from a different, lens. They think about money differently. They're open to challenging the status quo about a lot of different areas of life, particularly health, because they're a chiropractor. So they're going at that from a different, set of beliefs and a different lens. And so it's an easy transition for a lot of the chiropractic community and the natural healing community, different practitioners, to look at finances differently, and it aligns with whole life because they're like, oh, my money's growing for me more stably, and I have access to some of that money to use for different things that I want to do in my life. And for them, it's just having the control. We've talked to some, fairly wealthy people in the last few years that we've gotten to know that the big thing that drew them to whole life is being able to be in control, because so many of the different places that we're taught to put our money, we are taken out of control a lot of times. We don't have access to our money that we want to do the things that we want to, that we're always faced with penalties, or we're faced with fees or taxes to be able to access what we perceive as still our money, when in reality, there's, at least 1 degree of separation between us and our money. So there's a lot of challenges that come from that. So, I've seen a lot of need for that, for people to just want to be put back in the driver's seat of their money so they know what it's going to do. And then I know, one of the things you had asked us to touch on, Chris, is when do we see that whole life is not? And I know a few of the people that we've met with, even just recently, we steer them away because maybe they just don't have the right mindset for it. Maybe they just don't see the big picture, or maybe their income isn't quite where it should be. Maybe they need to focus on paying down some debt more to free up more cash flow, or maybe even focus on raising their income. Some people don't just have like a spending problem. Some people aren't using their gifts and talents to a great enough degree to add enough value to other people to reciprocate that into their life with additional money. So those are a few of the things that I've seen, and that we've steered people away from a policy just because, it's just not the right fit at the right time. I think down the road, as they develop themselves more and expand their income, I could see it being in alignment.
Love it. What so you just said something that I think I want to stay here for just a second, because one of the things we talk about all the time, I talk about all the time, is the fact that the value of a whole life insurance policy, because remember, a whole life insurance policy, when done properly and when thought about properly as part of your whole financial strategy, the life insurance policy itself is not an investment. What you do with it and how you leverage it, that becomes the investment. So that said, the value of this asset is different to different people for different reasons, with different skill sets and different abilities and different access and different networkings, with different groups and access to different deals. And, if if I have a whole life policy with a $3 million death benefit and $500,000 in net cash value inside of it, that carries with it a different value than somebody who's just working a W-2 and just looking to stash money away and isn't really looking for opportunity and isn't really being intentional about developing themselves and isn't really intentional about networking and finding deals and willing to make bold moves and do different things to become who they need to be to live the life that they want to live and become a solid investor in another area, whether it's building a business, whether it's investing in real estate or something else of that nature. So, what I swear I had a reason I was bringing all that up, and now it just spaced me. I think with that said, though, here's the deal. Like, even though I lost my original train of thought, going on that tangent, like that stuff, I think that element of it is the shift in value from person to person is so important. And what you said, oh yeah, I got it. What you said in your comment was, sometimes I find people that this just doesn't align for, and that's okay, right? Now, with that said, it's not that a whole life insurance policy is bad, right? But this is our job as agents, right? Like, this is our job as agents, is to not sell them a whole life policy because we believe everybody should have this, right? Even though I believe in a perfect world, it's your responsibility to become who you need to be, to provide for your family, to live the life you want to live, and to, be the best contributor to society you could possibly be, and all these things. And I also know I have no interest in pushing a rope. You know what I mean? Like, I'm not going to get everybody to be the best version of themselves that they can possibly be. But what I love about this is we don't have to just push our agenda. And I don't think you should ever just go into a conversation being like, you need a whole life policy, you need a whole life policy, or like, you need whatever it is. I don't think that's consultative. That's you pushing an agenda. That's why I've always hated like sales scripts. And it's why I've always hated sales presentations, because it's really hard to do a real sales presentation that's not just really funneling people to your desired result, right? If we focus on it being conversational, and I go down the path with you and I try to figure out, who are you? What do you believe in? What are your goals and objectives? What do you think you're doing well? What are you not doing well? What do you, where are your gaps ultimately? And how can we help you fill your gaps? The good news about whole life insurance is that, coincidentally, it just happens to fill a lot of different gaps. Now, the cool part is you can design it different ways to solve different needs. You know what I mean? If somebody just says, hey, listen, I'm really not interested in being a real estate investor. I'm really not interested in launching a business, but I do believe I need an emergency fund. And I want to have that set up. Well, maybe we fund it a bit differently, and the conversation and the leverage and the execution of the policy is going to be different. But we could talk about how this is going to be one of the best emergency accounts for them that they could possibly have, right? And so if we come at it from that perspective, now we're solving their needs, and we're doing it from an authentic perspective, and we're communicating it to them in a way that actually is relevant and matters to them. And I think that's super important, rather than us pushing our objectives, is like keeping it relevant to the people that we're talking to. And our job is to not push our thing and our widget, which is the whole life policy. Ultimately, our job is to see if that widget is even a good fit for them. And ultimately, I believe, and the reason I do what I do is I believe that for more people than not, it's going to be a good fit, and they're going to need it at some point in their life. So it's our job to figure out where on the timeline of life and on the journey are they, and how does it fit in to their objectives. Does anybody have anything else they want to say to that, or add to that, or an experience that goes along?
Yeah, I think
I'll add to that. Go ahead, Matt.
Ooh, yeah, this is going to get juicy.
Go ahead, Charles.
All right. So the way that I view whole life, and I've spent a lot of time reflecting on how it works for different people. And my whole goal is to make it easy and accessible for people to realize what that is for them. But first and foremost, with a whole life policy, it's going to offer a tremendous amount of safety. So putting your money in a whole life company, especially the ones that we recommend, which is a mutually owned and participating whole life company, it's going to provide some of the safest place where you can put your money. And the reason I say that is because the insurance company's whole job is to mitigate risk. So with a bank, the bank's job is to take on risk. That's how they actually make money. But with a whole life or an insurance company, they're always trying to mitigate risk and eliminate the risk. So when they execute a policy, they know that it's going to be guaranteed throughout your entire life. And that's what makes it so powerful when you're putting money into these policies. Another huge component of why somebody would put money in their whole life policy is because the access that you have. Um, you have access to either loaning the money or withdrawing the money. I recommend using the loans so that you can not interrupt the compound interest that you have with this policy. And that's a really powerful thing that a lot of people will look over and the argument with whether you should put your money in a whole life insurance policy or not. But um, by not putting your money in the whole life policy, you're not respecting how much money that's going to make you in the future, because you don't allow it to have that uninterrupted compound interest, which is huge. And then you also have the protection factor. And you're not just protecting your family with the death benefit, but in most states, you're creditor protected, you're bankruptcy protected when you're putting your money in these policies. So that's like super powerful. That's also really overlooked when the whole argument with the whole life, whether you should put your money there or not. And then the control that you have. You just, because you have that access to liquidity, because you have access to this money, especially like when the market takes a downturn, like let's say that 2009, 2010, when the banks tightened up lending, that wasn't the case with if you had money in your whole life policy. You could go out and execute deals, and that's when deals were most lucrative, is when there was blood in the streets and everybody was scared. And so when you factor all those different factors in, it just really makes sense. But one of the things that I wanted to bring up is, how do I view the different applications of whole life, right? Because everybody has a different mindset. We all have different views on how we think we should spend our money or invest our money. So let's say, for example, if you're a real estate investor, I would say you would probably consider overfunding or allocating more of your total net worth or more of your cash flow towards a whole life policy. And the reason I say that is because then what you can do is take that cash value and go and invest in those properties. And so at that point, the growth of your policy is growing uninterrupted compound interest, and so is the assets and the cash flow that you're getting from your investments in your properties. But let's say that maybe you're a 401k investor and you really like what your 401k does for you. Then I would say still allocate money to the whole life policy as what's called a volatility buffer. Still allocate a portion of the money, but maybe not as much. Maybe have a more balanced allocation of how much you put into your 401k and then how much you put into your whole life. And there is actual mathematical balance that you can achieve, and it will give you 25 to 50% more income in your retirement utilizing the strategy properly, which is, I think, huge. And then another reason why you might want to utilize a whole life policy is if you're having a little bit of trouble saving, or if you've fallen victim to Parkinson's law. One strategy that you could implement is, let's say that you get a decent raise. Instead of blowing it on lifestyle creep, what you could do is open up a whole life policy, maybe allocate half of that raise to that policy, and you're locking in that savings component, and you're getting that cash value, and now you're creating an emergency fund and also opportunity fund, which is extremely powerful. Now, let's say that you can't save it all, and it's just really tough. That's where term falls into play, in my opinion. So put money into term, make sure your family is protected, and do a convertible term policy, so you at least have the option in the future to utilize the whole life policy as your cash flow increases and as things turn around in your life. So that's just kind of how I view where whole life fits in, and why people should utilize it.
I love it, man. I love it. That's very, very well said. So that's amazing. All right. Somebody else had something they wanted to join into, but I mean, that was all really, really good info. Matt, is that you raising your hand?
There's actually a couple of things.
You're it.
You said that we can't offer whole life to everybody, but or something along that lines. But it's really hard to ignore that whole life is actually really good for everybody. And I say that because I don't lead with whole life when I talk with clients, but there's like 5 or 6 points just through questions and asking them what they believe in, where their values lie. There's like 5 or 6 points where it's the same answer every single time, and it's really aligned with whole life. So it's really hard to argue. Like, I think everybody should have whole life, unless I find somebody that has different beliefs. But here's a couple of things. So one of the things I ask clients and I talk about, and I want to figure out their idea of the importance is saving money, right? Do they feel saving money is important, having an emergency fund? The answer every single time, 100% is yes. And whether they're doing it or not, that's a different story, right? That's yes. Then I get into, risk aversion. Like, how do they feel about risk? Like, what are their thoughts about losing money? How comfortable are they with that? And over 90%, almost 100% of people are not comfortable with losing money. And they feel like, the conventional way of saving money, like in a 401k, is the only way you can do it. So it's almost like they have to put up with it, right? But I haven't met a lot of people that love to lose money and they're okay with risk. So that's 2. 3, I ask them, would they prefer to have control of their money? Do they like the idea of guarantee certainty? Do they like the idea that they can look ahead 5 or 10 years and have a really great idea of what's going to happen financially, right? Most people, almost every single person I met, they like that idea. That's something that's important for them. They would like that, right? And then taxes. What are their view on taxes? Do they prefer to have any type of asset where they can pull tax-free income and stuff like that? And almost everybody would say, yeah, taxes are going to go up, and yeah, I would like to have tax-free income in the future. And then the final 2 are life insurance, the benefits and the importance of it, and then living benefits. When I go through those 5 or 6 points, every single person till today all see value in that. And when you lead with that, it's kind of hard to argue what other product would give you all of those 6 attributes than whole life. I don't know, unless I haven't thought of it. And that's why it's just kind of hard to argue. Like, I think everybody would, want whole life if they understand
Fair enough.
important to them. You know what I mean?
Yeah, let me be really clear though. I wasn't meaning like at some point in time. I believe at some point in time everybody needs whole life and will want whole life. I think not everybody is ready for it right now. Maybe you have too much debt. Maybe you need to do what Charles was talking about, get a convertible term because your cash flow isn't good. You need to increase your cash flow, but in the process, you want to get that convertible term to lock in your insurability, pick up all those benefits, maybe get a term policy with living benefits to kind of cover a couple different needs in the short term, and pay off debt and increase your cash flow and improve your life. And then once you get to a certain stage, now you can start getting whole life insurance mixed into the mix. From a long-term perspective, I agree wholeheartedly. Everybody is going to want whole life insurance to solve different needs. You guys have touched on that, and I think it's great. But I think, different reasons, in different time frames that people are going to need it in different scenarios. So did anybody else have anything they wanted to, something top of mind right now that you just got to get off your chest? No?
I thought of something when Charles was talking.
Go ahead.
Chris, you mentioned the myth of, the return of premium, which, it's labeled that, but you could never have more cash value than you've put in. And obviously that's not the case. So it's like a myth, right? But another myth that comes up is, you only get the death benefit. Right? Yeah. And it's like, okay, but if you actually look at the policy and where that cash goes, it actually buys more insurance. So I've seen policies where, hey, the cash value is growing by 15 grand, but the death benefit's growing by 50 grand. So when you really start to understand how it works, like, would you even want the 15 if you can get the 50? Right? Like, nobody in their right mind would choose the 15 anyway. So the client's never at a loss, right? And that's one of the things I love about it. And compared to other products where the insurance companies, in order for you to make the product work, you have to lower the net amount at risk for the insurance company and take on that risk yourself. And here it's like they're taking on more risk as you go, which is pretty incredible for the client, right? And it's all guaranteed and in the contract. But the reason I'll say I got whole life and I'm a big believer in it is because I'm a big believer and I value control and liquidity. I think you have to be in position to move. And, I've heard different comments about the 401k or any kind of account where you're putting money and you can't touch it till you're 59 and a half. Right. And it's like, unless you want to pay taxes and penalties and stuff like that. But a couple of quotes that come to mind, Robert Kiyosaki says, hey, a 401k is a great plan if you plan on being broke, and then Grant Cardone says a 401k is where you put your money away for 40 years and hope that it grows up. And
hope that it grows up.
Hope that it grows up, right? And obviously both of those guys really believe in cash flow, right, versus accumulation. And I'm a big believer of the same thing. So I think when you come from that mindset and you realize the inflation going on and everything, it's going to be really hard to accumulate. If you just look at inflation, what you need to retire. Yeah. Right. And so you're going to have to start to think outside the box, and you're going to want to be in position to move when opportunity strikes. It's just strategic. Warren Buffett, there's a lot of news about him just a few years ago before COVID. Oh, he's in a bunch of cash. He's in cash right now. Well, why do you think? He was strategically positioning himself, and that's what we do with Whole Life. We strategically position our clients to be in a great position for opportunity.
For sure. One of the things that happened, in this wealthy accountant hit piece that I was responding to, and something I see very, very consistently across the board of all the people that like to bash on Whole Life, is they leave out a lot of the benefits. And I don't think they're leaving them out because they're leaving, they're intentionally like misleading people or anything. I think they just don't understand it. They don't. What I find is the people I'll just use the example, because it came up yesterday when I was filming this video a lot. It was just talking about the cost of capital, right? Like, Seb, you do a lot of loans, right? Like, you help people get SBA loans, you help people rebuild credit, you do a lot of that stuff. And so one of the things that I think is a huge value of a whole life insurance policy is that it helps you control the cost of capital in a way as an entrepreneur, as a real estate investor, and it gives you that flexibility that you can't even quantify the value of, right? Because because Matt said it, everybody at some point in time is going to benefit, and I think the values of Whole Life is going to align with your values and beliefs to solve different problems throughout life. Okay, that's fine. But if you're a real estate investor, if you're an entrepreneur, this is something you really need to open your eyes to, and you really need to take a look at, because one of the greatest needs that people have, and Seb, I want you to talk about this for a second, because one of the greatest needs that real estate investors have and entrepreneurs have is access to capital, right? And when you access capital, that capital always has a cost, right? And so that's not something, that cost of capital is not something that's going to show up as a value add on the illustration, right? It's kind of like the dude on the NBA floor that gets 2 rebounds and maybe scores 4 points, but he's a lockdown defender. If you look at the stat sheet, you're going to look at him and be like, that guy's a bum. Why would anybody pay him? But he's probably making $20 million a year because they're going to put him on Kobe Bryant back in the day, and the guy, he's just going to lock him down. You know what I mean? You can't put value on that guy, and the dude gets paid. Whole life insurance is the same deal. There's so many benefits that don't show up on the illustration, and I believe controlling cost of capital and having access to that capital is one of the greatest values. Now, Seb, everybody, welcome Seb. This is the first time on our panel live, so give him a round of applause. So I've done a lot of videos with Seb over the years, but here's the deal: Seb, you deal with this a lot. You help people navigate getting access to capital, fixing their credit, building business credit, getting loans. You deal with this probably more than anybody. So what say you on all of this?
The ability to just have the option, whether it's to borrow against the policy for your next investment, or just to have the ability to leverage the policy to even pay the note on that investment, or to help you pay that off faster. It just gives you options. So in some cases, the cash value can be used as collateral, and as actual collateral for a loan. So the thing that it's kind of like what you said, that people want to have their cake, but they want to have everything. I want to grow my money tax free, but if I leverage it or use it, I want to use that money for free. But if I borrow from a bank, it's not going to be free to borrow from that bank. And obviously, in every circumstance, you have to weigh the costs involved. But even if you can get a loan for your business or an investment at a lower rate than what you could get from your policy loan, then you might want to look at a third-party bank or lender that would give you a cash value line of credit, which could be a lower rate, or maybe borrow that money from that bank or lender, but then know that you have your policy loan in place or your cash value in place. In the event that you're overextended in the business, you now can access that to help maybe pay for that note, or even pay off that loan and transfer the debt from the lender to the policy. So I don't think it's a one size fits all for every business owner in every circumstance, right? I think we talked about this. We were on a feed the other day, and at the end of the day, you have to look at the particular variables in the at hand. What are the rates that you're getting? What are the terms? Is it revolving? Is it a loan? And then if you have that cash value line of credit, or if you have that cash value built up in a whole life policy, more than anything, what it's going to give you is the option, right? And now you have a choice of how you operate. And then if you choose to borrow from a bank or lender, then it gives you some additional protection in the event that things don't go as planned in the business or in the investment. You have that additional protection. So I think we were talking about it's not always, I think we landed on, we're not always going to say, replace the banks completely. Like, we don't never need banks ever again. I don't think that's realistic or even tangible for most people, right? But at the same time, even if you could, it wouldn't necessarily be the most strategic way to leverage your assets, because like anything else, if you can leverage that bank's money, right, and you have your cash value growing and you have it there as protection, then that's just more leverage and options that you have. That's how I see it.
It's interesting you say that. Like, so yesterday when I was doing this video, this cost of capital conversation kept coming up. It kept coming back to that, right? Like, because it's like the accountant obviously never worked with a real estate investor, because like, as a real estate investor and as somebody who like this is like the lifeblood of all the things that I do and think about as I'm doing all the things that I'm doing, it's, think about it this way. We always say we want to align people's money with their values and beliefs, right? And so there's three different ways that the world could go right now from a financing perspective. Interest rates can go back down, right? Interest rates could stay level, or interest rates could keep going up, right? Is there any other option? No, it's one of the three. And so what I need to do is I need to figure out, like, what do you believe about where you think interest rates are going to go? Now, nobody has a crystal ball, right? But if I, rather than trying to, if I were trying to work with Seb in this instance, rather than trying to go to Seb and be like, hey man, like, I think interest rates are going to stay high and they're going to keep going up, and this is what, if Seb is like, I don't believe him, like I'm really not in alignment with that, like, then I'm shooting myself in the foot, and I'm crippling my ability to actually help him, right? Versus if I just asked Seb, like, hey, what do you believe about where interest rates are going? I believe they're going up. What do you believe? And if he says, no, man, I think they're going down, right? What we can really do is we can understand that in any, and this is why I love whole life, in any economic environment, it provides options and control, because in a low interest rate environment, having your money in a whole life policy as interest rates go down, and where we were back in 2020, when you could get a cash value line of credit at 2.25%, all the while your money is in your whole life policy earning 5%, right? Now you have this automatic baked in arbitrage by collaterally assigning the cash value in your policy to the bank, leveraging the whole life policy, and you create this extra leverage with like no risk. It's magical, right? It just, in fact, it deleverages and takes risk off of the investments that you're making and creates more value in it simply with what you're doing. Okay, that's A. That's if interest rates go back down, we could be there again. I personally don't see that happening. I think if it does happen, we're all in a lot more trouble than the alternative. Like, it's going to get ugly if that happens. But that's just my belief. If you think that's a case, just know that opportunity potentially exists. If interest rates stay where they are now, dividend rates are going to keep coming up because they lag and they kind of trail the market by a couple of years. So your policy that you're looking at now is going to outperform the illustrated value that you're seeing. And, loan rates might continue to go up. If rates go up, that loan rates are going to increase in the market. Right now, for a secondary home, think about it this way. For a real estate investor at this moment in time, to get an investment loan on a property, let's say you put 25% down on that property, your investment loan on that property is 7.5% if you got good credit, right? And so like at 7.5%, like if I could show you that you had the ability to get a loan from your whole life policy at 5.5%, that's over 30% better, right? And so what's the value in that? That's never going to show up on an illustration. But if you have that access to capital, and now you as the investor, you have to determine, is the value, that 30% reduction in interest cost of value, worth giving up control of that capital, right? So now you got to make these decisions. And that's where I started at the beginning of the day, is like, this is a bit more of a the process and the foundation, the product is very simple in how it works. The strategies can get a little bit more complex in how you use them. And that's why you need to become who you need to be to understand all these things, to actually leverage it and implement it. If you just, that's where I'm saying, like, a lot of these people, like this wealthy accountant guy, likes to rip on it, and his numbers are not wrong. They just don't matter. The numbers they focus on to a person like me are irrelevant, and it's like, I don't know where to go with that, with people like that. And it's just like, I don't know. I always think of Ron White, everybody know Ron White, blue collar comedy guy. No, he's famous for saying you can't fix stupid. Like that's just, that's just it, like I can't help people like that, but, that cost of capital, guys, like, to me is and the control and the cost of capital, because I love it. If interest rates keep going up, think about it. In a low interest rate environment, whole life injects this automatic safe arbitrage unlike any other asset in the world. We all agree on that?
Yep.
Yes.
In an increasing interest rate environment, whole life injects low cost of capital in a high cost of capital environment where also loan restrictions are probably higher, right? And so the value of the access to that capital and the fact that it's lower cost of capital, because even if interest rates went up to like in the 80s when they were 15, 16%, which hopefully it doesn't get that bad, but like, let's say they get to 10%, which is, we're not that far from that. A couple things go wrong in the economy and in the world, we go there, right? And I'm not saying it's going to happen, but it could happen, right? And if it does, the fact that your policy loan will never have more than an 8% loan rate, and it's a variable rate, and right now it's at 5.5 when the world is at 7.5 on the best debt you can get, which is a home, right? Whereas, like, what's a personal debt right now? Well, like, if you went out and got unsecured debt, or even if it's secured right now by something, like, what are we looking at for rates right now, Seb?
It depends if it's collateralized or not. But are we talking about like just a conventional mortgage, or are you talking about like an SBA?
Like a business loan. Yeah,
business loan. So, traditionally an SBA loan is one of the best loans on the market for businesses because of the term and then the rate. But the rate is attached to prime plus a bank rate that's fixed. So right now with prime at 8.5 and SBA is at 11.5 with the bank fixed rate at 3%. Right now that does adjust and fluctuate quarterly, right?
Okay.
So there are people who had these loans, let's say 7 years ago, that got them at 3%, when prime was 3.2, 3.5, plus the bank rate at 2.73. So they were around 6.5. And now those same people have it adjusted and they're at 11.5.
That's painful.
But then you also have the most popular loan on the market to business owners, not popular because they love it, but popular because they don't have to have good credit. As long as they have good revenue, they can get these merchant cash advances, which are basically payday loans for businesses, where they don't call it an interest rate, they call it a factor rate. And they're literally charging between 35 to 50% interest on a 6 to 12 month term. And businesses are getting choked out. I actually refinanced into a 10-year term on an SBA 7A for a lady who had 5 of these. She was paying $300,000 a month in fees and to these lenders.
My God.
And if she didn't get out of it within the time frame that I was able to get her loan closed, she was literally going to have to close her company. She was a home healthcare company in New York.
Holy cow.
And by doing that, by restructuring it, she was able to, hire more nurses and expand to like 20 locations. And, where one more month of that, and that would have been it. She would have had to shut her door. But there's boiler room operations, and this is what they're selling. You get 10, 15 calls a day, and they tell you it's whatever you want it to be. If you're looking for a line of credit, it's a line of credit. You're looking for a loan, it's a equipment loan, it's an equipment loan. Whatever your industry is, it's that whatever you're looking for. And their whole thing is that it's a factor rate, it's not an interest rate, which is a risk assessment, and that's how they get away with it, based on the factor rate, which again it'll be between like 1.35 to 1.5, and then if you get one, they put a UCC filing on your business, which is a lien against your business assets with the Secretary of State. So now you try to get another loan, you can't get it, so your only option is another cash advance. Before you know it, you're stacked. You have 4 or 5 of these, and you're choking out. So, I mean, look, nobody wants that product, right? Someone who's intelligent, who's gonna like look past the fluff and the sales pitch, is gonna probably look closer and realize that's not a good option, especially if they have good credit. If you have really good credit, you have really strong bank statements, you've been in tax returns, you've been in business for at least 2 years, you can get a open-ended business line of credit through a brick and mortar bank, maybe somewhere between, I'd say between 4.5% to 6%. That's a possibility today, but that's not accessible for most people. Most people are going to fall somewhere in the range of lending loans between, I'd say, 8 to 15%, and that's actually good. Those are good rates in the business environment when you're looking at getting, and that's uncollateralized, right? That's unsecured.
Yep. Yeah. But that just goes to show, like having a whole life policy, if rates go down, could be a good way to collateralize and get the rate lower with a bank potentially. And B, if the rates are higher, just use your whole life policy loan and do it yourself, and reduce your cost of capital and go from there, because
just imagine those guys, like the people I told you, let's say 7 years ago, they started off with 6% interest. Those loans go up to 5 million, right? So let's just say that guy got a $1 million loan. He's 5 years in, the rate bumps up to 11.5% because that's where he's at. If he had a cash value, policy, that would have been a great time for him to borrow at 4, 5, or 6% from his policy and pay off that 11.5, right? He didn't anticipate that when he got that loan 7 years ago, 6 years ago, when it was 6%. He wasn't thinking this is going to balloon or jump up, because we're going to have COVID and all this is going to happen. No one saw that coming.
You didn't see COVID coming?
Yeah.
No.
I wasn't in those forums.
Those weren't your meetings? Oh man.
Yeah, I missed the memo.
And all right. Well, guys, I guess we don't need to stay on like the cost of capital topic, but I think that it's a little bit more of a sophisticated, right, conversation about ways we use it. But I think as people go down the rabbit hole learning about this stuff, the people that reach out to us and like are wanting to do these big policies and whatever, it's like anything else. As an agent, your ability to solve problems, right, and help people have, provide value to people and help them solve problems in their life is going to be directly correlated in how much money you make, right? Money follows value. And the bigger the problem you can solve, the more money you're going to make. And like, these are more sophisticated, bigger problems that you're helping people solve. And now when you start talking to business owners and real estate investors, it's one of the reasons that, like, we're doing premiums. I think we had 3 premiums come in this week that were multi-6-figure front loads with $20,000 to $50,000 a year premiums. That was just this week. You know what I mean? Because, and I remember when I got into the business thinking to myself, like, I can't even imagine ever doing, a 6-figure front load and a 5-figure policy. Like, if I could do one of those a year, that would be amazing, that kind of deal. And now it's like, you just realize the bigger the problem you solve, the more value you add to them, because now this value add of helping them have a solution for the cost of capital and access to capital, and having this solution to make their real estate venture better. If they're a private lender, if they want to be a hard money lender or something of that nature, if they want to use it for their own business or their own real estate portfolio, there's so much value in this. And as we're entering, and I'm seeing more and more and more, I actually, I've got a guy who just wrote, interesting story actually, and I'll talk about it for a sec. I saw this Business Insider article. Anybody ever read Business Insider? It's kind of, I don't know, it's kind of like, it always comes across my Google feed or whatever. I don't subscribe to it or anything, but every now and then they have these free articles you can read that come across my feed. And it was talking about how everybody's getting the economy wrong. Everybody is like starting to be really excited that we, the soft landing wasn't even necessary. We're going in the right direction. The economy's booming and all this stuff. And this guy wrote this article that was just brilliant on how we're in so much trouble now and people don't even realize it. And the economy is like, we're right on the precipice. And his name is John Wolfenberger. And it was just a great article. You can go look it up, but it's on Business Insider. But I felt like compelled, and I was like, this is amazing. Like, this is the information everybody needs to understand. And he was all about like having dry powder, having liquid accessible capital to take advantage, because this next bounce, so to speak, this crash and bounce, because that's what will always happen, is going to be make it or break it for multiple generations of families, right? You're either going to crush it in that window or you're not, right? And if you don't, you're going to have a hard time catching up. And so I was like, man, this guy's so much in alignment. I just reached out to him on LinkedIn. I'm like, dude, can I interview you like on the channel? Like, that was, I read your article, whatever. And so on April 12th, I'm interviewing him on the channel. It's going to be awesome. And so everybody subscribe, hit the bell, come check it out. It's going to be awesome. But yeah, exactly. So but this is where we're going, right? And these are the problems that we can solve. And I'll still hold tight to, if you want the most basic tenet, when we talk about, all right, the title of this video, let's get back and keep it simple and make it for, dummies, so to speak, even though whatever, I'm just totally hacking the book. But if we break it down simplistically and don't get into all the sophisticated things, and we just say, do you believe you need an emergency fund or not, right? Like, I believe in asking people questions that I kind of know the answer to already, right? Because like, we're just trying to get people to think differently, right? And so, do you believe you need an emergency fund? And I don't know a person alive that will say, openly acknowledge as an adult that would say, I don't need an emergency fund. I don't know anybody like that. Do you guys know anybody like that? My guess is if you know people like that, you're probably not going to call them and try to help them, because they're probably beyond helping, right? And so, like, most people are going to say, yes, I need an emergency fund. Okay, if I need an emergency fund, the question is, where's the best place to keep your emergency fund? And most people will tell you, oh, savings account or something of that nature, because you need it to be liquid. Well, that's a great part about whole life insurance, is that it's an actual pure emergency fund, because you can have access to it that's similar to a savings account. But then on top of that, where are real emergencies? Like the thing that I think is missed by most companies or by most people that talk, like Dave Ramsey's of the world, is when they talk about building an emergency fund, they go, oh, you need 6 months of in case you lose your job. That's not an emergency. Like, go get another job. Like, build your skills. Anybody, if you can't learn a new skill in 6 months to go make more money, like, that's not really, I mean, yes, I could see how it's an emergency. You want to be planned for that period of time. But I'll tell you what an emergency is: getting cancer when you're 45 and you got 3 kids at home, you know, getting disabled, getting, you know, having some type of real catastrophe hit your life. And I know that if I keep my emergency fund of 6 months of savings in a bank account and something tragic happens, 6 months isn't going to really do anything to help my family. But if I have 6 months of income in cash value and a whole life policy, and then I get diagnosed with cancer, and now I have the living benefits that can accelerate it, that's a real emergency fund. That's going to help me in all different potential types of emergencies that I'm going to face. You know what I mean? And so, like, I get a lot of pushback from people being like, oh, whole life is a horrible emergency fund because, like, if you lose your job, you're not going to be able to pay your premium, and then the policy is going to lapse. And it's like, if you're saying that you don't even understand how, like, all the moving parts and the ability to, like, use premium offset, and, like, you losing your job is the lowest of low levels of emergency that you need to be considering. Is that fair? Anybody disagree with that? Like,
That's spot on.
Like, you know, so I think at a basic level, that's what we need to be, like, contemplating is, like, all right, what do you need for emergency? Once you have your basic financial foundation built and you have your emergencies covered and you've got that adulting side of it done, now you can start thinking about expansion and growth and, you know, whatever. And all the while, I encourage everybody, like, you're never going to have a better investment than yourself. And I know that sounds cliche, but your ability to earn cash is going to outperform any other ability, you know, to invest in a stock market or any kind of investment for most people, right? So go out and invest in yourself, invest in credentials, invest in knowledge, invest in networks, invest in all these things. I mean, I join masterminds sometimes. I join groups. I paid $25,000 a couple of years ago to join a group. I knew I was not going to learn anything from this group. I just wanted to be in the group with the people. You know, I just wanted to be with them. I wanted to be able to talk to them. I wanted a reason every month to be able to be on a call, to talk to these people, because I knew they were exactly the type of people I wanted to be around. And I knew that if they knew what I know about what I do, they'd want to share it with their group, right? And I also know there's a chance that, you know, they wouldn't see eye to eye with me, and, you know, it'd be fine. But it's a calculated risk that you have to take, right? And I did it, and it was one of the best things I ever did. You know, and so, like, I could have put that $25,000 in, like, some 8% mutual fund, right? Or 12%, as Dave Ramsey says, right? You know, or I could take that and I could invest it in myself, right? And I could pour it forward, right? And the beautiful part about having money in a whole life policy is that it can be the emergency fund. It builds up to become, you know, the opportunity fund, and then it's a personal growth fund for me. Like, that's how I look at it, and that's how it's allowed me to really expand my life. And, you know, Nelson Nash always said, the more money I have in a whole life policy, ironically, the more opportunity just has a way of tracking me down. You know, and I think that's, you know, I think once again, we go back to the intangible value that can't be calculated on an illustration. Access to capital is king. If you have the money and opportunity tracks you down, you know, if I've got 400,000, 500,000 in a whole life policy, and everybody else has no money in a whole life policy, and I can get a deal done quicker, and I can, you know, in a market environment where the market's tough and banks aren't lending the same, and it takes time to get done. Garrett Gunderson, when I was at his cabin in Utah, he was telling me he got this mountain cabin that's amazing. He got to pay less for it in a competitive environment because the people just needed to get out of it. And he had money in his whole life policy. He was able to close in 9 days. Everybody else needed at least a month, and the people needed out. So he got it. And it wasn't a matter of money. It was a matter of, like, how fast can the transaction be done? And so that one thing on a thing like that had like a 10% value on the asset price. That then he was able to then go back through and refi and do what he wanted to do and, like, get the rate, you know, like, but access to capital created a huge amount of value that you'll never be able to calculate on the illustration. But it's not because the policy is like, it's because he had access to capital, and it's because he was who he was, and he knows how to leverage the asset, and he knows how to identify opportunities and, play the game. If you don't understand how to play the game, you're going to lose. I don't care what you're doing. So I think that's the key here is everybody's like, the thing I don't like about infinite banking, the thing I don't like about whole life, the thing I despise about IUL is people saying, just put your money in this product. It's going to solve all your problems. I got news for you. There is no product alive that's going to solve your problems. The thing I love about what we do, and the more I do it, the more I coach to it, the more I coach my clients to it, the more I coach agents to learning it, the more I'm realizing, I think the thing I love the most about this is not the product itself. It's the fact that there's principles behind, there's economic and personal development principles behind all the philosophies that go along with this that force you to become who you need to be to live the life that you want to live. And if you're not willing to step into that, well, then this isn't right for you, period. But I got news for you. If you're not willing to step into that, your life is going to be really hard, no matter what. I know that's kind of bold. Somebody step in and say something for me.
That wasn't bold.
I think I can speak to that. I've been, over the last week and a half, I've spoken to 3 different young families, let's say. Two of these families, they're essentially in an entrepreneurial endeavor, creating small businesses. And one of the families is not creating a small business. They're living in suburbia, W-2 employees. And the people, the 2 families who are the more entrepreneurial mindset, and they're creating their own small businesses, the idea of cost of capital to them, like having the ability to access money, like that has a lot more value to the entrepreneurial folks than the people who are working the 9 to 5. All great people, like really lovely human beings, and their values are different. They value different things. And just by having conversations with these different families, it's been fascinating, because I know I can see that the family who's working the 9 to 5s, that a whole life insurance policy, it could do so much for them, but they don't see it, and it's not something that I can push on them. They have to want it. There has to be value in that for them. And they don't see it. Like, unlike the entrepreneurial families, they're like, oh yeah, this makes sense. And as I'm talking about the different things, that whole life insurance that's properly set up with a mutually held company, participating company, like, this all makes so much sense to them. The other family, that what makes sense to them is giving their money to their financial advisor, who's going to do what he does with it, and they've been told not to ask any questions from their financial advisor, and to them that makes sense. But there's a different level of responsibility and self accountability with entrepreneurs. If their jobs fail, there's some real consequences to that. For the folks who are in the W-2 9 to 5 position, if they get out of their job ends, or they get laid off, or they quit, they just go get another job. Like, there's just a different sense of accountability and self, responsibility, and how they're going to get to their goals, whether they're going to do that themselves, or whether they're going to put their financial future in somebody else's hands. So, to what you're saying, Chris, I think, from what I'm observing, it's like, yeah, at some point in life, a whole life insurance policy for most people is going to be beneficial. My sense is that for the folks who are entrepreneurial, it makes sense right now. For the folks for the folks who are in the 9 to 5, it's not going to make sense to them until the stock market crashes and their money's gone, and they're like, okay, I don't want to do that again. What's my other option? And unfortunately,
isn't.
That's something they're going to have to come to on their own. But it's really beautiful that we have this tool that's so versatile that can help such a wide range of people in different economic situations, different lifestyles, the whole range. Whether or not that person wants it or is ready for it is a different question. But the versatility and the ability to help a lot of people is really there with this product.
Let me ask you guys this, like, and I think this is important for everybody to understand, because, you know, in this whole philosophy of aligning our money with our values and beliefs, I remember when I first got into the business, it was 2009. Obviously, the timing of that, I don't need to tell you guys all, like, right? Like, that was right after the Great Recession, kind of in the middle of it. Like, it still hadn't really fully started bouncing back with any level of confidence yet. And so I just remember going through that when I first got into the business and watching my father-in-law, who is like one of the best human beings I know, but he was a stockbroker, financial advisor, fee-based, you know, money manager. And his clients, even with the best of his ability and as intentional as he is about helping them, they lost 40%. And I remember him coming home. I was literally worried that the stress was going to kill him, you know, because he did care so much, you know, because so I want everybody to understand, like, I don't think all financial advisors are bad people. I just think you giving up control of the results in your financial life is just kind of dumb, you know, like, because nobody else is going to be able to create a result for you, you know. And it's not that you can take and get these results, these desired results, without taking on risk, but it's, you know, where is the risk that you're taking, and do you have any kind of influence and ability to control some of the variables and be able to, do you know how to play the game? And if you don't know how to play the game with money, then your whole life is going to be a struggle. Like, you know, that's just a reality. If you get them, you know, I talk about the 5 F's, the faith, family, finances, freedom, and fitness, or fitness and freedom. You know, we're all on this chase of, you know, freedom and like wanting to be independent with our money, you know, but I just truly believe there is no freedom without good relationships with God, whatever that means to you, without amazing relationships with our family, without our health being intact. You know, how many people do you know that retired and, you know, worked for their gold watch, have a pension, and then they get to retirement and they die? You know, like, I met a guy who worked for, you know, I was working with marketing for a while, like when I gave up my licenses and I ran the marketing agency, and he was kind of working as a client, and the dude worked his whole life for like the Horse Racing Association, right? He worked at Saratoga and Belmont and places like that, worked his butt off, did really well, made a lot of money, just bought his dream house on the lake, literally got pancreatic cancer and died 3 months after he retired. Never got to experience any of it, you know? And it's like, to be able, you see these stories all the time, and you like doing what we do, and especially what I do on the level that we're doing it, and the amount of reach that we have, and the people that I talk to, and the clients that we have, and the experiences that we've experienced, and that we've experienced, and the stories we hear. It just really solidifies and validates and like makes me realize how important what we do is. And like the sad part is I feel blessed that I came into the business at that point in time, and that I got to see my father-in-law struggle emotionally with knowing his heart, knowing how much he wanted to help, and then also seeing he was just handcuffed. There was nothing he could do about it. When the economy goes like that, everybody says you should be diversified. What does that even mean? Like, the correlated movement of all assets in all markets across the world, because we are a one world economy at this point in time, for the most part, that like diversification to a financial advisor used to mean like have some brick funds and have some exposure in, you know, different markets. But when the market goes down, right? Like gold crashed, every market crashed, like whatever. And so like when that happens, you know, there is no getting away from that. There's no way your financial advisor is going to insulate you from that. And so, you know, I just think that, I think the sad part is, and while I feel blessed that I came into the market and I got to see that and experience it, and it shaped my values and beliefs about what our role is and what our responsibility is as advisors and coaches and agents or whatever to help people. Like, I also think that people are going to go through their own journey. And I think it's sad that unfortunately we can only help the people that ask for the life, ring, and that want the help, right? That are in alignment with what we already say. And some people, like what you just said, Ian, they need to experience the pain. And unfortunately, there's a massive opportunity cost to that delay, to not being willing to be proactive about it. And all we can do is love people, try to serve them, and be there for them on the back end of it all.
Yeah, Chris, I want to share. I've actually kind of done an estimation, the opportunity costs of not having control and liquidity of my money.
Okay.
And I'm 40 years old, and I estimate to this point it's cost me about $800 to $1.2 million. And then just imagine the next 25 years, if I want to retire at say 65, that compound growth that would have happened. So I missed out on a lot of money just because I didn't have control and access, and I couldn't make the decisions I wanted to make.
Yep.
And that, like you said, that'll never show up on a spreadsheet. That'll never show up anywhere. You cannot calculate that. It's just an estimation, but that's a pretty accurate estimation. Just kind of looking back at different things and where prices are with real estate right now.
Yeah.
And then just the importance of taking control of your financial future. I'm working with a client right now. She's actually 65 years old. She's looking to leave her job. And the reason she wants to leave her job is because it's 14-hour days. She's a head nurse. And she's just stressed. She's been in and out of the hospital. She's had cancer, all stress-related illnesses. And so we're going to be able to help her get out of that job. She's going to take a less stressful job, but we're going to have to bridge this gap for about 5 years till the Social Security. We can kind of max it out, but it's just, you got to take care of that. You got to be in position. Luckily, she had some savings. She's obviously not ready to retire at this point. She does not have enough, but she did at least position herself well enough to be able to take a lower paying job at this point, which is good for her. But this is more than money. It's health, it's time, it's all sorts of things. So,
but having the money game right helps you show up in all those areas better. It's going to help your, it's not going to make your relationship with God better, but it'll help you tithe more if you believe in that value. It'll help you contribute to your community more. It'll help your health more. It'll help you pay for organic food and work out and have the, hopefully the time freedom to be able to do so. It'll help your relationships, right? Like more marriages end because of financial stress than any other reason. That is just a fact, right? So like you owe it to yourself to get the understanding of money down, and I challenge anybody, if you're struggling with money, the reason you're struggling is because your money is not in alignment with your values and beliefs, period. Go across the board. I'll have that conversation with anybody, and that goes for people that are making a ton of money, right? You could still be struggling. My guess is struggling because your money is not in alignment with your values and beliefs. And that is what it is. And so let me ask everybody this. Where does everybody see the world going right now, the economy going? Like, we're coming into an election year. I'm down here in the Dominican Republic. I've put myself in a little bubble so I don't have to deal with all the drama. I went back to Florida last week for 5 days. And while I was there, I was like, why didn't I leave sooner? This is insane. The level of insanity in the media that you automatically get blasted with, that I can find it. Don't get me wrong. If I go to Google and I just Google, tell me about all the problems in America, it'll tell me, right? And I could go search it out. But as soon as I landed the Miami airport and I went through, I swear I could just watch it in the TVs in the bars and restaurants as I'm walking through, and I'm seeing P. Diddy getting arrested for trafficking and and these are the first things that I'm seeing, and I'm like, oh my God, what is going on? Joe Biden making turning Easter into transgender, whatever day, visibility, what? My head was about to explode, guys. I'm get me back to the DR as fast as I can go. Let me get what I need done and get me the heck out of here. I can't take this. So where do you guys what's going on here? We got an election this year. I'm totally changing topics. We're going away from whole life because now Like, talk to me, because it's important. Like, this is the stuff.
Living in the U.S. for dummies.
Yeah, and living in the U.S. for dumb. No, but like, depending on where the country's going, that should impact what you believe about where the country's going is going to impact the decisions you make with your money. Fair enough?
For sure.
All right, somebody take the floor. Where do you see 2020 going, and what would you advise your clients to do if they believe what you believe?
Well, I would imagine put your money into anything that you have more control of. I think it's apparent that the feds and everybody that's in charge of managing our country, which is basically a business, have poorly managed it. And if any business was managed like our country, that business would be out of business. So it's clear that the people that are in charge, we passed an inflection point. We can no longer go back. And now we're headed to uncharted territory. And I think they're not seeing a lot of good things. And of course, they can't tell the public because everybody would be freaked out. So I think we're going in a direction that is unknown even to the so-called experts. And I think there's going to be a lot of certainty. And I think I would suggest put your money in places where you have control of, you have access of, and ride out the storm. At the end of the day, no matter what happens, we always bounce back in humanity. So we might have to go through some tough times, but we'll all come out at the other end and things will work out. But as we go through it, as we go through the storm, I think you need to have more control of your life, your money, and control what you can control. And that's all you can do.
I love it. Anybody else got something to say?
Yeah. I think Tony Robbins says it best: prepare for the winter. We don't know what the future holds, but just based off of how everything that we see with the markets, like nothing makes sense. Just be prepared for the worst, right? And then also be prepared to jump on opportunity, because when there's blood in the water, that's when the biggest opportunities you'll find. But overall, 2024, once the election goes through, I think they'll figure out a way to prop up the economy. And then whoever gets elected, no matter who it is, that's when I feel like there's a much higher chance of everything just falling apart and getting ugly.
Yeah. Isn't that the way it usually goes, right? Like during an election year, they find a way to just kind of keep things going. And then as soon as there's a transition of power, things fall apart and they get to blame the preceding or the leadership that preceded them. It happened when Biden came in, right? He blamed Trump. Trump blamed Obama, and Obama blamed Bush, and Bush blamed Clinton. And, this is just the way it goes. And it's like, it's not rocket science. This is the funny thing, is like, if you believe history has a habit of repeating itself, like, the market is cyclical. It has these cycles. It's going to go up. It's going to go down. The cycles are pretty predictable. I think the cycles in the last 10, 15 years since the recession have been a little jacked up, so to speak, because of manipulation and interjection by the government with quantitative easing, money printing, monetary policy, all that stuff. And they've kicked the can down the road and they've kept the bubble going. And, then with all the stimulus with COVID that happened and whatever, like nothing makes sense. And so I think the problem right now is we should have had a cycle happen already and we haven't. And so now the longer we go without it, the more painful it's going to be when it happens. You know what I mean? And that's just like, I'm not a doomsdayer. Like, I'm not a guy that is worried about like everything falling apart. But I do believe that I look at those things, the down cycles, as opportunities. You know what I mean? I want to be like, to me, those are the times that I live for, because I don't want to say I get excited about them, because I know people are going to like suffer in them. But personally, I enjoy them because everything gets cheaper. Opportunities are abundant. Right now, it sucks. Like, everything's kind of going pseudo good, Everybody's like, oh, the economy's great. The unemployment rate is great. Like, jobs are strong. Like, whatever. But look around. There's no deals to be had. There's no value in investing in anything. Everything is overly inflated, overpriced. It's a bunch of joke. There's no cash flow in anything you do. For somebody like me, this is horrible. Like, it's not a fun place to be. Like, I want to go somewhere where there's opportunity, you know, like where you can create something. And that's not America right now. And it's really weird to like, for that to be the case, because it's been a long time since that's been the case. And so I think it will be the case again. And I think it will be the case again soon. But I think, you know, we're going to have to feel our pain before, you know, before that happens. So anyway.
Chris, to speak to that, I recently did a video about where I highlighted where different people talked about an impending failure of banks. Jerome Powell, the chairman of the Federal Reserve, he's predicting bank failures coming. They just stopped the program that was allowing banks to basically stay afloat by borrowing money very cheaply, and there are, you know, what we experienced in 2023. In 2023, when we had 5 bank failures, and the size of that failure for just those 5 banks was greater than the bank failures in 2008 and 2009. We've just been kicking the can down the road, and the underlying problem is the kind of what you pointed to, the lack of opportunities. The commercial real estate market is stagnant. People aren't buying, people aren't selling since the interest rates have gone up. Like, everybody's stuck. It's just sitting here without, you know, there's no motion in it. And those the loans,
velocity of money.
Yeah, the money isn't moving. And when the money isn't moving, a lot of the small regional banks, a lot of what they've done is loan money to commercial real estate. So as these loans, you know, as things stay stagnant, these loans don't get paid back to the banks, and the banks become more and more insolvent by the day. There's no magic cure for this. It's something that's been a can that's been kicked down the road, and at some point, it's going to hit the wall, and it's not going to be pretty. It's going to be a bank consolidation essentially. And what I'm personally doing, and what I recommend for my clients and the people that I work with, you know, I'm not a financial advisor, but I tell them to really take a hard look at how much exposure they have to the market, and if they think that's a good idea right now, just to take a long, hard look at that.
Well, that's just solid advice. I mean, everybody should always look at that, period. You should never entrust anybody else to make that decision for you completely. One of the things that I think is really interesting about what you just said is with the banks last year, you know, those 5 banks being bigger than 2008 altogether. The interesting part about that is if you look at the underlying reason all 5 banks said to their failure, it was a lack of a shortfall of new deposits, right? So what does that say to you with the banking system? If they're failing because they don't have enough new money coming in to pay off the old debt and to pay off their obligations, that tells you that they're over leveraged, they don't have enough deposits, they're, you know, whatever. And if they don't get new deposits to pay old obligations, they're insolvent. That tells me they're a Ponzi scheme. That is the definition of what a Ponzi scheme is, period. And what's interesting is I give the infinite banking concept, like the really hardcore people, kind of a hard time sometimes, where I'm like, you're never going to eliminate the banks from your life, right? Like, nor do I think we should ever eliminate. It's what Seb and I were talking about before, the last time we had a video. What I find really interesting is if everybody did what we say and took their money away from the banks and started doing their deposits in their whole life policy, we could force a lot of bank failures, because we'd shift the money flow from banks to life insurance companies, and they'd all fail. I don't think that'll ever happen.
That'd be awesome. Direct deposit into your whole life.
Wouldn't it be cool?
Let's figure out how to make that happen.
Well, the
But I
premise
mean,
of
that's it.
the premise of my video was like, what's going to happen when these banks start to fail? Where are people going to want to put their money in a place that they know it's going to be safe with a company that's got a long-term track record of success? It's kind of a no-brainer to me.
Love it, man. That's cool. All right. Well, I think that's all for today, guys. Anybody got anything they want to add at the end? Anything top of mind? Pressing? No? Yeah? No?
I think the only thing for me, Chris, I'd just say, you know, I think it's apparent there's forces of dark and forces of light going on right now. And I think the dark forces are all about disempowerment and I would encourage clients to do things that puts themselves in a position of being empowered with their money, whether that's whole life or whatever resonates with you. And then I think I'm reminded of Ed Foreman. He's passed away now, but he was big in personal development, and I was exposed to him several years ago. And he always taught about back when he had like a sand and gravel company, and he was a 2-time senator. And back in the 80s, when there was the recession back then, his businesses boomed, and people asked him like, "How did you, crush it in a time where we should be having struggle?" And he's like, "Well, I just chose not to participate." And I think that's the reminder to us all that we have the power as humans, and the dark side tends to take away our personal empowerment for us to create the life that we want. So that's my encouragement for anybody listening. Like, just because things are crumbling around you doesn't mean you have to participate. You can control what goes on up here. You can control your actions, and you can create the life that you want with, good, solid principles.
Especially if you prepare for it and you're able to be proactive in that environment, right? If you're reacting,
exactly,
it's going to be really hard for you. But if you're proactive and intentional about it and prepared for it, that's when it could be a game changer. And that's when you could choose to not participate, and you could be on the other side of the coin and actually benefit from it. And so, that's it. Make no mistake about it. When 95% of the people in this world is struggling, there's a heck of a lot more opportunity for the 5% that are ready for it, right? That's just it. There's so much more value on the other side of that coin. You just got to be willing to do the hard things ahead of time, make the hard decisions to get prepared for it. And that's what we talk about. So, all right. Well, I guess this wasn't, so basic at the end of the day, but, I guess it's hard to keep things super basic for an hour and 20 minutes, but here we go, So I thank you guys all for being here. Guys, if you haven't already, make sure go check out everybody. Everybody just end this by saying how they can go find you. Michael, start with you.
Yeah, you can find me on YouTube, IC Life. That's my channel. You can also find my page, starticlife.net.
Cool. Ian.
I am on YouTube, Ian Vogel Media. Come check me out. I've got a bunch of good videos and a lot more coming up. I'm also on my website, freedomflowfinance.com. And if you have an IUL and you want a second pair of eyes on it to make sure that it's going to be okay, come check me out at IULrehab.com as well.
Love it. Matt.
You could send an email to matt@life180.com. We are looking for people that want to get into the industry, build a big business. Reach out. We'll have some fun.
Charles.
You can find me on YouTube at Charles_SHF.
For Safe Harbor Financial. It's awesome. Jeff.
You can find me on YouTube at Wealth Energetics. My website's wealthenergetics.money, and Facebook, you can find me at Wealth Energetics as well.
Love it. Seb.
You can find me on all different social media at The Approved Guy. And that's my website too, approvedguy.com.
Awesome. And if you're here, you're here. You know where to find me almost every day. But here's the deal. Before I go, I do want to also say, I encourage everybody, if you're an agent in the business, I am here. I'm in my studio in the Dominican Republic. The ocean's right behind me, even though you can't see it. It's through those trees there. We are running a mastermind for agents in April. It's coming up fast. So get your tickets while you can. Tickets are still cheap. I just checked from Miami on the dates that we're doing. Things are still very, very affordable. We have a couple spots left open at this point in time. Go to mastermind.life180.com. I'll type it in here, mastermind.life180.com. You can go check that out. I would love everybody who's an agent who's looking to build your business, come down, learn about advanced sales concepts. We're going to be doing a lot of different things. I literally built this in a way for the time frame that it's like kind of the biggest no-brainer in the business for the amount of time that you're going to be there, for what you get for it. The cost of the mastermind will include everything except your flight. You got to pay for your flight. You got to get there. But once you're touched down in the DR, so you got to have your passport. But once you touch down here, all your transportation to and from the airport, all your food, your hotel, everything. We're going to have some fun too. We're going to do some excursions because I can't have you come to the Caribbean and not have some fun. We're going to do some of that. I'm not going to tell you what I'm trying to do because if I don't get it pulled off, I don't want to disappoint you. But I'm trying to do something really cool that you're not going to want to miss if I can pull it off. And I think I'm going to be able to. So it involves being on the ocean. I'll say that. It'll be really amazing. So I hope anybody that's interested in coming, go to mastermind.life180.com. If you have personal questions about it, email me, chris@life180.com. Happy to have a conversation with you. Scott Janad, yeah, man, awesome. Thanks. Would love to catch up, connect with Matt, and if makes sense, let's keep the conversation going. But yeah, glad to have everybody here. Thanks for being here. It was a long video, good video. Hopefully everybody got a lot of value out of it. Reach out. Hope to see everybody who wants to be down here as soon as possible. 3 weeks. Here we go. Have a blessed, inspirational day. We'll talk soon. Later. Thanks for being here, guys.